This is the Friday, March 27th, 2015 version of the Market Plus segment. Joining us now are Walt Hackney and Virgil Robinson. Gentlemen, welcome back.
Thank you, Mike.
Now, Walt, we want to start with you. We didn't have a chance to discuss the hog market, which has been an interesting story over the past 2 weeks. Talk to us a little bit about what we can expect here in the short term. Where do you see this hog market headed?
The point you just made has been a source of encouragement for that group of hog producers that have been sitting back there, taking the bait and swallowing the hook last year on the effect that the PED virus had decimated all of 15% of the pig crop, and as a result we were going to be in an extreme shortage of hogs going into this year in the market end of it. All of a sudden in the last 2 weeks, that psychology is starting to change. And all of a sudden, a lot of those analytical viewpoints are starting to do an about switch. They're saying maybe the availability of market hogs going into the fourth quarter of this year isn't going to be that huge overload. It, in fact, might be that we're going to have fewer hogs available than we've got now, because what they have learned is the credibility of the reports of the PED death loss back last year and in 2013 were not quite as accurate as what we thought, and may have been overstated to a certain extent, and that 15% death loss might not have been there. And it may have been more like 5. And as a result, this 2, 3, 4, 5, 6, 7% increase through expansion that is coming out in our last hog report in various sectors of it, the kept for breeding, the marketing, and so all hogs and so forth, that may end up being a little bit on the short side going into the fall of this year. There's nothing that is concrete on that, but the idea is there that those people that expanded were looking at a huge FUPA a month ago and thinking, why did I do that? Why did I go to all that expansion when all I'm doing is adding to the problem? Now all of a sudden, maybe they're in the catbird seat, and maybe they're going to be more accurately involved in the fall as what we thought they were.
All right, so this might have some legs under it as this psychology has shifted.
Yeah.
All right. Well, now, and that's interesting, talking about market psychology and how producers react to a changing environment. Virgil, that leads us to our next question. And this one, we might not have time to get through all of it tonight, but I'd like your input, at least in part. Adam on Twitter is curious. We've seen the Argentina currency and the Brazilian real fall compared to the U.S. dollar. But he's curious, why are farmers in Argentina and farmers in Brazil doing opposite things with their crop? Argentina's appear to be hoarding, while the Brazilians appear to be selling, despite similar moves in their currency versus the dollar. What drives that shift in psychology between those two places?
I think the Brazilian situation, Mike, again, there are some political and policy issues as well as labor issues that have probably prevented as many beans flowing to market as historically would be the case at this point in the calendar. Now, I think April, May, and June, be prepared for a pretty significant influx of Brazilian beans into the export market. The Argentinians, the country, for lack of time here, is in complete disarray. They're hoarding beans as a hedge, an inflationary hedge, which to this point has had mixed results, but there'll be a point in time where they'll have little or no alternative. They'll need to move that inventory. And of course, the Argentinian government is anxious for that to occur because of the tax and the tariffs that are placed on bean sales. So it's inevitable, it's coming, particularly with the notion now that they have another sizable crop imminent. So bean supplies moving forward, Mike, are not going to be tight by any stretch of the imagination. They're going to be quite adequate. And if we grow a record crop of beans in the U.S. here in 2015, clearly that will have implications to price.
You bet. Now, it's interesting. I was reading about that Argentinian political situation and the farmers storing beans in the large ag bags. And there have been reports, I don't know if this has been confirmed, of vandals slicing the bags open to encourage farmers to sell it. Makes you thankful to be in the U.S., you know.
I've not heard that.
Okay, that was on the internet, Virgil, so it's got to be true.
Well, everything's true on the internet.
That's right. And now, Walt, that's going to throw us back to you as we talk the U.S. dollar. That's been a huge story. Our currency makes us so much more expensive relative to the rest of the world. We've got a question here on Twitter from former farm boy at West Des Moines, Jeff. We keep hearing that the strong U.S. dollar is hurting pork exports, but beef is staying strong. Should we expect this to continue, or what's happening, do you think?
I think that the pork is going to increase as a result of our strength in, or lack of it, if you will, but the strength in the dollar has regulated the export of our pork. There isn't any question, I think, about that. Beef has been at such a level, and the packer has regulated the production of beef at such a level that I think that the combination of domestic usage and the amount that we're currently exporting of the beef is going to stay relatively level. And so I don't see a lot of change in the beef exporting.
There's just not enough beef to export.
Well, the packer, instead of killing 120,000 cattle a day, which we're totally capable of in the feedlot if we were pushed to do that, what did we kill day before yesterday? 99,000 cattle, which is nearly unheard of. That's a holiday in the industry. And this was a normal day's production because the packer has lost so much money that he's only able to kill enough to cover his standing orders.
All right. Now, this is a great discussion about kind of global impacts. We've got another question about global geopolitical events. Phil in Ontario, Canada. Virgil is curious about this conflict in Yemen. Do you expect it to have much impact on oil, the dollar, or ethanol, or any impact on corn? Is it a big enough deal to drive these commodity markets in a meaningful way, do you feel?
Well, if it persists and intensifies, certainly. Trying to handicap events in the Middle East, North African region, I'm very little help there. The dollar, I think, will continue to remain strong moving forward, Mike. Now, again, as all commodities do, it will cycle and it will change, but I do not see that in the immediate future. The dollar is strong enough to the extent that importers, and it is conceivable at some point here in the near future, we could consider importing various commodities, including soybeans and products, out of the southern hemisphere. So we need to keep that in the back of our minds as well. It wouldn't have to be significant volume. Just the notion that we're importing South American soy product or soybeans would have an effect on markets as well. So helps define the risk, I think, in the soybean market moving forward. Right. Well, what was the last part of his question, Ed?
Ethanol. You talked about imports, and there's been talk of importing and exporting ethanol. Yeah. Of course, we do both. Any impact on there? How does that industry look going forward?
Phil needs to understand that sugar prices are at a multi-year low, and there's an excess of sugar, and much of it's being refined into ethanol or alcohol. Now, the Brazilians have increased their mandatory usage of that product in gasoline or motor fuel, but I think production will overwhelm that current percentile. So there is a lot of ethanol available, and again, policy will be determined in the near future in terms of the RFS and how RINs behave. That'll be a factor. So it is conceivable that we could be, in select instances, importing Brazilian ethanol.
All right.
While exporting U.S. ethanol.
Having the boats pass each other.
There are various RIN strategies that become that will be employed, Mike, as we move forward there in that particular commodity. So it helps explain the mystery of price discovery. You know, you've got to have your own plan. You have to understand what's important to you and what you're trying to do with your operation. If you're trying to outfox geopolitical events, the likes of which have been mentioned there, that's going to be real difficult to do.
That's a tall order.
Yeah.
Yes, indeed. Well, gentlemen, I want to thank you both for taking the time to join us this week. Really appreciate all of your insight.
You're welcome,
thank you, Mike.
Thanks to all of you for watching us here on the internet at Market Plus. Tell your friends, tell your neighbors, and keep sending us your questions via Facebook and Twitter. Thanks so much for watching, and have a great week.